Welcome to the money class on ODOOM'S forum. Here, all we do is to discuss money and everything about money. So, if you are somebody who uses money, of course, I know everybody does. This is the channel for you. So, on ODOOM'S forum, we discuss personal finance and we discuss financial management, investing, and all that. And so, if you are somebody who uses money, once again, this is your channel, and you can join this family by giving us a thumbs up, by subscribing to the channel and clicking on the bell notification button, so that anytime we drop a new video you will be notified. So this is the money class, and today we are moving on to another fundamental concept on personal finance, and we are discussing assets and liabilities. Assets and liabilities. Some people define assets as the things that provide future economic benefit to those who own them, and liabilities are basically the things or the obligations that reduces your economic benefit in the future. And so that is like what kind of the accounting definition of asset. Now, for personal finance, Robert Kiyosaki gave us an interesting definition, and he said that assets put money in your pocket whether you work or not, and liabilities are the things that take money from your pocket. Now, I'm sure you've already begun to think about the things that takes money from your pocket and the things that put money in your pocket. And so the ones that bring money on the table are the assets, and the one that takes money out of you are the liabilities. So I mentioned earlier in the episode 1 and 2 that the three things that you mainly need in building wealth is one, discipline, and number two is time, and number three is money. Now, where you direct your money, so where you direct your money will determine whether or not you are going to be receiving additional incomes, or you are going to be losing incomes, or you are going to be losing money. And so the money part of this conversation is the asset and liability part. The money itself is an asset, and the decision to direct your money to an asset line or a liability line will determine how your the kind of financial well-being you build. Okay, so you should begin to ask yourself, do you direct your money to things that brings more money, which is asset, or you direct your money to things that takes money out of you, out of your pocket? So that is the money aspect of wealth creation, and asset and liability topics are centered on that. So very simple, the things that takes money out of your pocket and the things that add money to your pocket. Now, I want to give you some examples of assets. Now, assets can be categorized into the most liquid ones, which are basically the things that can be easily converted to cash, and cash itself is one of them. So there are some investment options that for them, if you want to convert it to cash within a month, within a week, it can easily be done. And we have those that it takes time. Okay, it needs time to appreciate. It needs time to appreciate. Now, for those that can be converted into cash, for instance, your savings account is an asset, and today, if you want to withdraw the money, in other words, if you want to convert it to cash, it can easily be done. Having stocks and all stocks, which is an investment option, is also an asset. Having treasury bills is also an asset, and you can easily convert them to cash. And all these things I have mentioned are stuff that are have the ability of bringing more money to the table. They are investment options. Another thing is having a house. Okay, having houses, real estate. It is an asset. Why? Because it can generate rent revenues to you. And so it depends on where you direct your money to. Are you directing your money to the things that brings more money, or you are directing your money to the things that takes money out of your pocket? And so you should start asking yourself. Now, if you invest in yourself, if you invest in education, it is capable of giving you a value which will in turn bring you more salary or more revenue when you take up contract. And so education is an asset. And so it depends on where you direct your money, as I keep saying. Where do you direct your money? Do you direct your money to the stuff that takes out money from you, or you direct your money to the things that brings you more money? Let me use a phone for example. If you have a phone, it's a property and you might call it an asset. But if your phone is something that does not bring you money, but at the end of the day takes money out of you through airtime, bundles, and all those stuff, then that becomes a liability. And so you can have a property, yes, it is an asset in accounting terms, but if that thing takes out money from you, then it becomes a liability. Now you can be having a car and probably not working and having enough money. If you end up feeding the car every day with petrol, then that becomes a liability. And so liability, like I said, are the things that takes out money from our pocket. Okay. And our focus is that as far as our wealth creation journey is concerned, we must be interested in directing our money to areas where we can generate more money. Areas where we can generate more money. And so if you end up directing your money, which is one asset, to an area where it will be taking out extra money from you, then you are not earning well. You are not having a good financial well-being. Now, the asset and liability conversation is so broad, such that you might have one thing, it might look like a property. Of course, it can be a property in accounting terms, but at the end of the day, that thing might end up taking out money from you, and that will disqualify it as an asset and make it a liability. Now, assets also can be items that appreciate over time. There are items that depreciate and items that appreciate. Let's look at a land, for instance. If you buy a land, for instance, within a year or two, the price is going up. So land becomes an asset. If you buy a car, for instance, and the prices of a car, okay, a car manufactured now does not appreciate, it rather depreciate. It is new models that comes with new prices. And so if you buy a car, that is an asset, yes, a property you have. But the thing is that the value is depreciating with time. And so if you are not using the car for something that is generating additional income, then you are losing. Okay, so that car will end up taking money from you through feeding it with fuel, repairing, and all those stuff. So that is another thing with the liability. Now, for young adults, you can look at some basic things like phone. Okay, so you can invest in phone. So let's say you are buying an iPhone, just the old edition is 5,000 worth cedis, and you're a student, you don't use the phone for anything that generates you money. The result will be that you will end up feeding the phone with money. Okay, so you use the money to buy the phone, that is money subtracted from you, and then you use money to buy data and airtime for the phone. And so you see, that one item, it is your property though, but it is taking money out of you. And like Robert Kiyosaki said, assets are the things that makes you money even when you are not working. So, for instance, having an investment option, having a stock, having a T-bill. For instance, I mean, those in Ghana, some stocks in Ghana are doing like 125% capital gains on a year to date. And if you have stocks in those companies, that is making money whilst asleep. Let me even use a YouTube channel as an example. Now, if you have a YouTube channel, when you record the video, you upload and then you go and sleep. Now, people will come and watch the video, and that is income generating. That is income generating for you whilst you are asleep. And so, for those who follow my channel, my advice is that you focus on the things that brings more money on the table, which is to say that invest your money in the things that brings more money on the table. It can be education, yes. If you invest in education, if you invest in yourself to have a cash generating skill, the result will be that it is going to earn you more money. Yes. So you can have a degree. If you invest your money in getting a master's, your salary increase, and that is additional funds. If you invest your money in land, with time the value will appreciate and it is going to generate more money. But if you invest your money in stuff that do not generate more money but rather takes out more money from you, then you are in trouble. So today's conversation has been about the assets and liabilities, and I centered on Robert Kiyosaki's definition. Asset is something that puts more money on your pocket whilst asleep. When treasury bills, stocks, and those things, if you get the markets right, they will be making you money. Today, Ghana's 364-day bill is going for 31%. So if you invest the money today, by the end of the year, you have 30%, 31% return. So that is so interesting. That's asset. If you invested in stocks, by the end of the year, all other things being equal, if the market goes right, you will be having gains on the price and when dividends are paid. So you see, you are not working, your money is working for you. Your money has been directed into stuff, other assets that is generating more money for you. And so your interest always in making decisions with regards to your finances is to be interested in the things that brings you more money other than the things that takes out additional money for you. Now the sad thing is that you use money which is negative from you to invest in something which will become additional negative money from you, which will kind of take money from you. So your interest should be in making financial decision. It should be okay, so whether or not this thing I'm going to invest in, is it going to bring more money or is it going to take out more money? Not in the short term alone, in the long term. That's why I said education is bad. If you are investing in yourself to get more skills, in the long term, it's going to generate you more cash. And that will be it. So assets and liabilities has been our conversation, and this will be the end of episode 3 of the money class. Once again, if you are new, kindly give us a thumbs up by subscribing to the channel if this is your first time, and click on the notification bell too. So 12 minutes 30 seconds till we meet again in episode 4.